everybody. This is Patrick MontesDeOca with Live Trading Talk with Patrick MontesDeOca. This is February the 16th, 2022. We have some really kind of mixed market, mixed markets here, based on the news that are coming out from Russia, indicating the reversal of yesterday. There seems to be back and forth going on here, whether they're going to be pulling out some troops or not, and it's causing just a lot of choppiness here, back and forth here, and it's really really, I would say, frustrating that this nonsense is going on. It's between the rhetoric of interest rates and the Fed's inflation, um, and now this Russian situation here. It really kind of makes it sometimes a little difficult here to follow the direction of the market that the market wants to go without the influence of all of this um, irrational behavior, I would say, which kind of leads me to believe that because there seems to be this great deal of rhetoric, propaganda, false information, uh, it could be hiding what really is underneath. And when you take a look, at what really is underneath all of this, whether it's a communist party or democratic, socialistic, it's the economic system. It's the economic foundation. I always say, even in your home, if you don't have your economic foundation solid financially, you're going to have problems. And so we're beginning to see on a bigger scale here that the global economic system is going through a change, a transformation based upon just this pandemic that came in, that has shifted and changed the foundation of things as we knew it. The uh, the Russian threat of invasion is causing, on grains, a tremendous amount of uncertainty in terms of the availability to import grains, basically, to Europe during this time. And so the world may, be turning into the U.S. This is why we have this grain markets here. Basically, the meal made a high here recently of 474.90, and as you can see here, it's just exploding here. So um, we have the grains here, which are being affected by this tremendously, beginning again to show an explosive pattern that is breaking above the highs that we made back in last May. Um, and breaking through this here, we're looking at corn reaching unprecedented levels. Soybeans, they went from 1181 a bushel to the high that we saw here, about 1630 a bushel. We haven't yet broken the highs of 1667 that we saw on May, but if you take a look at the corn, if you take a look at the meal, if you take a look at the crush of the grains, It is really a tremendous bullish chart. As you can see, a rounding formation, and it's about to break out to the upside. So one of the reasons why I'm talking about the grains here is because I'm focusing on one of the components that make up the CPI, the PPI. The problem is that they do not include the cost of commodities or energy, for that matter. And so, uh, when we talk about this possibility of Russia invading the Ukraine, we're talking about potentially um, disrupting the gas pipeline from Russia, potentially causing crude oil to go to $100 a barrel and then some. And crude oil is also part of the component of the PPI, the CPI. So if we take a look at uh, the current data coming out regarding the CPI, the PPI, we're running at 40-year highs as it is right now. And we have a real issue here that I'm focusing on, and that is essentially where are interest rates going to go. And the 2-year note is trading above 2%, headed towards 2.5%. Two or three right now. And I'm looking at particularly the 10-year note because it is the leading indicator of not only inflation but potential recession signs. So far, the 10-year note seems to be pricing in or adjusting to this inflation number that we're running in the neighborhood of about 8%, 8.5%. When you take into account that the 10-year note is at 2%, it is a negative 6% real nominal yield. Real return is under 6%. And I don't think this negative yield spread is discussed enough in the financial markets because it is causing or going to cause potentially a financial crisis. If this gap doesn't narrow, and as they say, inflation continues to go up, the spread is going to get wider, and that is a sure sign of whether interest rates are going to have to run up sharply to catch up to that, or they have to bring inflation down, or inflation to come down. I say they have to bring inflation down, and I'm saying to myself, why did they have to do anything? This is what's called manipulation. If they just let the markets do whatever they're going to do, the markets always find its mean, its equilibrium. And unfortunately, that is what's happened here in the interest rates markets, that they have gotten completely out of whack. In comparison to the velocity of inflation that we have. And yet, if we look back at the 10-year note, just going back to January of January 7 of 2020, you're looking at 0.33% yield. In 2 years, it went to 2%, over 2%, and on the way to 2.5%. Something's got to give. And again, either inflation has to be subdued, or interest rates are going to shoot up really fast. They have to. They have to catch up to inflation, or we're going to go into a real deep recession once again. So let's talk about interest rates rising fast. What is it going to do to the economy? That means the cost of money is going to be going up. That means that evaluations have to be recalibrated in the stock market. Pretty much everything has to be recalibrated to this new dynamic that we're going to be dealing with, rising interest rates. And so we have potentially, I think, a few black swans that can unfold. We don't know whether it's economically or geopolitically here, but we certainly have a lot on our plate, and this is what's causing a great deal of volatility in the market, obviously. So coming back to the sectors here, I'm looking at the grains, I'm looking at energy. They don't seem to be indicating any kind of slowing down in the pace of the acceleration of their prices. Demand is increasing. Supplies are real difficult to get, even though we seem to be moving into some kind of a normal economy in terms of supplies. It's going to take some time. The Russian situation is playing a very, very major role in impacting where we headed here. Unfortunately, it will change the foundation, of a lot of markets, particularly, again, commodities and energies, and that is not deflationary. It's putting more pressure on the U.S. through interest rates to be raised or go into a recession. So is this a geopolitical economic tactic of putting pressure on the US dollar? I believe it's all of it. I believe it's all of it. Russia entered into an agreement with China to use the Eurozone on the energy exchange between those two countries as a form of payment. That's another punch to the US dollar. So as I look at here, and I'm into this whole environment, and I'm saying, okay, how do I monetize out of this? Well, you obviously have to be long energies, commodities, and the markets that I choose to trade more actively are in gold, silver, and Bitcoin. So let's come back to the markets here for a minute and try to see how we can put all this stuff together and make some sense after we come back here. Let's take a look at the gold market. Trading last at 1864.70. We're looking at the daily chart. And we can see the market has reached the sell on one level daily here. As of yesterday, that we got up to about 1881.60. And this is beginning to show resistance up here. This whole area is called distribution of supply, where the mathematical probabilities of the algorithm anticipates that in this area we can potentially see some inventories come into the market, sellers come into the market from a trading point of view. Nothing shifted from the fundamentals, which long term are beginning to be incredibly bullish. But sometimes these headlines tend to bring in traders and cause what sometimes we call a bull trap or a bear trap, in that either the market is going to break through this and accelerate through this resistance level, breaking through 1882.97, even the weekly 1905 level here that indicates potentially can be broken, 1883. This whole area is the area of supply and resistance. And if we are able to break through this, then you're looking at a target of about $2,000, which can happen relatively fast. One of the things that I want to point out, if you're trading commodities here, that it is a really fast environment. When the commodity markets enters into fast conditions, sometimes it can be obviously great if you're on the long side, or if you are with it, or if it's against you, it can really, really hurt and be very painful financially and emotionally. So you want to really kind of measure if you are trading some of these markets cautiously, and sometimes even trading one contract can be too much risk because of the volatility. So you can look at the options, you can look at more conservative strategies that you can apply, and depending upon your profile and so on, that you can begin to strategize and create some of these opportunities that are creating potentially what could be an explosive market in commodities, for example. So coming back here to the markets that I trade here live in the Discord trading floor is gold, silver, and Bitcoin. And looking at today's action here for the silver market, the price is trading above the daily average of 1861, and it's above the weekly average as well of 1845. And for day traders, there is basically no high probability signals right now from here, because we're looking at standard deviation 50-50 when you're trading the average. And I personally choose to trade the highest probability trades only, and that is when the market gets to a 50-90% probability, which is basically the market rising to 1883. That would be a really high probability trade if it activates a short trigger. So I'm prepared, if we run up to 1883, to take and unload some of the profits on my long-term positions, possibly look to hedge at that point. If we come down below 1861, we can come down to 1845, which is the weekly average. And if we close below 1845, we might be entering into a short-term counter swing, bearish swing correction that could potentially activate the 1823 target. So right now, a lot of ifs. If the market does this, if the market does that. And that's exactly the way that you want to trade. The market's got to confirm those potential strategies. If not, stay neutral and wait. Patience is a key element in this whole game. Let's take a look at silver. Silver is also above the average price, 23.49. Same scenario using the silver data. It's trading in the same area, the average daily price and the weekly average. It's neutral to bullish price momentum, and pretty much the same strategy. Wait until the highest probability trade is executed. It's a standard deviation 50-50 right now, and I want to wait it to a 50.95, which is above the mean of 23.90. The mean is 23.49 daily, and the weekly target of 24.06. Or come down to 23.2282 weekly, or 22.96 daily. So, and it's kind of in a mixed area, in the middle of the range, basically. Take a look at gold again. We did that one, and let me go into my Bitcoin signals here, and obviously we've all are also coincidentally in the same area of standard deviation 50-50 on Bitcoin, and we in terms of our position here, we recommended to go short on some micros here yesterday, in fact, and we've covered them this morning. We took a nice profit in here, and we are now net long, basically, our Bitcoin position long term. And we are trading against that short term as well as long term, which is what the market provides for me, the ability to put on my position long term, and Bitcoin is a long term position for sure, and use the volatility of the market short term. So we seem to be in neutral areas in gold, silver, and Bitcoin, and very bullish here for grains as a consequence of this Russian threat that seems to be imminent. And, potentially anything can happen, particularly over the weekend. So this is where we are right now, and let's see what the market brings us here for the rest of the day. I'm going to be open here in Discord trading room the rest of the day, providing active signals or just market commentaries here. And if you would like to join us here, please do subscribe and like, and I'll be more than glad to accommodate you for that. In the meantime, my friends, have a great trading day here. Thank you for this time, and I will be talking to you soon. Be well.